Hi guys, and welcome to the Savvy Money Show with me, your host Sean. If you enjoy any of the entertainment in today's show, please hit that lovely like button. If you haven't subscribed already, please hit the subscribe button, and please hit the bell notification. You'll be notified whenever I upload any other videos. I'm looking to upload a new farmer stocks one, including a new Gilead one, jump on before the rise. Also, I haven't forgotten a comment from one of my followers. I will be doing one on is Jim Cramer following me. I'll answer that in another video. Anyway, on with the show. First one, we're going to start with what's called a new thing, a funder show. Trying to get as many stock tips in as possible. I'll start with the reason why, and if I can't, I'll just put in tips. Remember, you have to do your own due diligence on this, because I'm just an idiot on the internet who didn't go to college or university. Anyway, I'm going to show. Revolve. I mentioned this in a previous video. I said Revolve and Nordstrom. I bought Nordstrom. They both went up. I sold Nordstrom at a profit. Nordstrom went back down again. Revolve went up and looks like it's carrying on going up. Could be the new Nordstrom. That's my first tip. The second one is going to be Small Direct Club. And a few people may question that because it actually isn't in profit and it doesn't have very good earnings. However, there's some good things for it. It's actually increased dental care access versus 3 major US insurers. Now that's the first thing, which means it's going to get massive amount of customers through that. In the past, they haven't bothered with the dental insurers tie up because it's a lot of paperwork, but it will bring in a lot of revenue. Sorry about this. Next one is they've been awarded a patent for a small shop concept. I don't know what that is. I don't know how you can get a patent for a shop, but I don't know if it's a smart shop or what, but that's the next one. Now, sorry that is so around the place. They registered a net loss of 28 cents a share. They anticipated a loss of 21 cents a share. That's why they're down so much, because their loss was 7 cents a share less. Firstly, people are not going to care about the way they look if they're not going out. They'll wait until they're about to go out, then they'll get it fixed. They may even get a discount. Also, they're not open, a lot of these places. Same time, sales climbed 11% in the last quarter, 297 million from 178 million. But analysts expected 213 million. So that's 25 million less than the analysts. So they are improving sales. It's just not as fast as analysts expected. Now, you can see here that customers and orders are increasing year on year. Sales are increasing. Net income. Now, sorry that I'm rushing through, but as I said, I want to get through as much as possible. The cash and cash equivalents were 103.5 million, an increase of 38.2 million. Now, they've generated $8 million in free cash flow just during the first quarter. And considering how bad the first quarter of this year has been for most companies, I think that's amazing. Now, the next one to go on to is going to be we're going to discuss is the USO. I discussed it before when talking about oil tanker stocks, and people may be wondering why I said about going into USO if you're going into oil tanker stocks. Well, it's about hedging your bets. Unless you think US oil is going to stay at a low for the next 20 years, that was a play to go. Now, you can see that here it's showing not much difference. And it's not this type of thing where if you you buy into it, millions of people buy into it, it goes up. No, it depends on contracts from the companies. And you will see, if I go in here, how that price was the close of yesterday. If I go in here and click on it, you will see huge jump. Now, you see that huge jump because the energy, and I expect that to jump up even further. Why? Because the energy department of the US government has just announced they're going to be buying between $1 billion to $1 trillion of oil. It will start with $1 billion, and in tranches they will buy more if needed to prop up US oil business as reserves. Now, this I think is a good idea. They get the oil at a cheap price, and it's better than them doing what they did with the airline companies, which is giving them free money. They have already given money to these companies. They can't keep giving money to these companies because the common man on the street will be saying, how comes we're not getting money and that these big corporations are, while we're being laid off? So the government's getting a good deal with this, a better deal than they did with the airlines, and the oil companies are getting a good deal with it. It's a win-win. So we've got to trade the reaction, because every reaction is an overreaction. Once the news hits mainstream, it will come up even more. It's also hedging our bets for those of us who have the oil tanker stocks. If oil goes up, tanker stocks go down. We want to keep our oil tanker stocks because they're going to pay us huge dividends, and we go in here at a low. As you can see here, it's not the lowest it's been, but it's near enough. $8 is the low, but it's near enough. You know, when you consider $40 as the high, it's in between. We jump in between. If it jumps up higher, we've protected our investment. Anyway, I have to move on. Remember, this is not a stock. This is an ETF of all the oil companies in America. Right. The next one is Alliance Data Services, and that is ticker symbol ADS. And the reason for that is they deal with the airmail system. They also do cloud and loyalty based businesses. Now, they have a dividend of 2%, PE ratio of 3%. Now, no offense, they're 37. I recommended these when they were 30. I wouldn't take it at 30. I wouldn't sell at 37 because I think they could get to, well, 153. I think maybe sell at 153, but I reckon they could get to 300 if you're willing to hang on for a long time, and I'm talking 5 to 10 years. If not, if they hit 153 within a year, then I won't mind selling. The next one is going to be, right, I'm going to have to rush with this, sorry, I'm going to have to just punnel through. Right, we're going to have, here we go. Right, next, you can see the price here. It's got $1.5 billion market cap. I'm sorry, you have to do your own research why I'm recommending these, because I'm running out of time on this. So I've been criticised for the time I spent on these. $350 billion market cap on Walmart. We all know Walmart. The ones I'm rushing through are to watch, whereas the other ones are to buy. And we have, there's Alliance Data Systems Corporation, which is 1.7 billion. We have Main Street Capital Corporation, which owns equity and they loan money to businesses as well, and they have a dividend, it says, of 8%, but I would only guarantee be considering them paying a 5% dividend. Anything else is a bonus. Federal Realty Investment Trust, I know it's a REIT, but again, 5%, anything above that is a bonus. I would look into it and see if it's one that you want to pick up for long term, not for short term, just because the price of it is very good. And I would also, as I said, another thing, backtrack, I said about MGM, and I gave my reasons in a previous video about MGM. Now they are going to be opening their Louisiana casino. Louisiana want casinos to open. Half of them have said it's not going to be profitable for them to open. MGM are opening their casino. So what's going to happen to the people who usually go to the other casinos, don't touch MGM? If them casinos aren't opening, they're all going to pile into MGM. And what are they going to do when the other casinos open? They'll probably be so used to going to MGM, they'll stay there. Not only that, remember what happened to Disney stock once they announced they was opening their Shanghai Disney park. It went up. Don't forget, there's a lot of insider buying within MGM at the moment. Anyway, that's all for now. Don't forget to hit the like and subscribe button. I'll have a lot of more videos coming soon, and I'll speak to you later. Bye.